We have a bunch of consumer stocks on our radar today. Not only are we seeing reactions coming in from Dabur, yesterday there was the analyst meet of Godrej Consumer. We have United Breweries post markets yesterday. And now today we have earnings coming in from, the likes of Titan, we have Britannia, we have Pidilite, we have Asian Paints along with Kalyan Jewellers reporting their numbers too. So let's get in an entire, lowdown on the consumption space. We have Abneesh joining in from Nuvama. Abneesh, you've heard from a lot of companies that have reported their numbers so far, management commentaries. While from a texture standpoint, it's not very different from what it was in the third quarter, there are signs of improvement, at least if not in the first quarter, second quarter onwards, both volume pickup and sequential improvements in margins as well. Would that be a correct assessment?
I will agree partly to it. So thanks for having me. So if you see, Marico and Tata Consumer did see improvement versus the previous quarter. Marico with 7% volume growth. Tata Consumer gave the overall volume growth for India for the first time. 6%, not a good, bad number at all. So yes, from a outlook perspective, I think most consumer companies have said that in FY26, from a demand side, things are looking better. And from a raw material side, we'll have to monitor. Yes, crude oil is looking soft, but definitely a lot of other raw material like tea, palm oil, copra, still good news is awaited. From a Q2 perspective, I think the improvement could further happen on the urban demand side. So in urban, if you see, results are awaited for more consumer companies. Currently, there is a challenge. So we have seen discretionary demand, QSR, apparel, etc. In FMCG also, urban demand is a challenge. So yes, from a Q2 perspective, urban demand, there could be some improvement. Food inflation is soft. We have seen interest rate cuts twice happen. We have seen also the tax rebate, for example. So yes, rural is doing well. Urban, there's still the challenges there.
Okay, rural is doing well. Urban, there are still some challenges. If you had to just narrow down, Abneesh, and say talk about the domestic volume growth expectations for a Dabur going into next quarter, what would it be, and what would the trend be according to you in FY26 as well?
Sure, I think giving out Q1 is too early. Currently, we are just navigating halfway into the Q4 results. So I will say that it's a bit early. But in case of Dabur, clearly the base is quite favorable. Yesterday in the call, they have addressed on the FY26 outlook. They believe that high single to low double-digit kind of a sales growth is possible. And my sense is volume growth should be also pretty close to that if they can deliver this kind of a number. Street was awaiting more clarity on what McKinsey's overall feedback, overall plan is. I think that's a 3-year overall plan. So we will await more clarity there. But in case of Dabur, clearly Campa Cola is impacting the fruit juice business. And on the Ayurvedic portfolio, I think they need to contemporize overall to the youth, etc. And from M&A perspective, also the way Marico has really changed the portfolio, I think a lot of the other consumer companies should take some learnings from there, that they have to grow around 20 to 30% of the portfolio at 20-30% to get a 6 to 7% volume growth. Otherwise, core part of FMCG cannot grow at that number. I think Marico, that's why is something which we really like in the staple space. We also like Britannia, Nestle, we like the liquor companies, and we like definitely Pidilite also.
Take that point, 30% of your business has to grow around 20 to 30%. That's something that Pidilite has been doing fairly well with their pioneer and growth categories. We've seen that with Marico, the digital and foods portfolio. Also, Tata Consumer has that, Sampann, Soulful and Nourishco portfolio along with Capital Foods that has been projected to grow at 30%. On Dabur itself, I wanted to ask you, Abneesh, I remember, I'm sure when you started tracking the sector, Dabur was compared at par with HUL when it came to looking at consumer sentiment and being leaders in the sector. Thereafter, it started being looked at par with, say, something like a Marico and Godrej Consumer. Now, after the derating that we've seen on Dabur's multiples, the earnings disappointment, a lot on the street believe that maybe it could be put in the bucket of, say, something like an Imami or Bajaj Consumer. What does Dabur have to do for things to change for them and the street to look at it once again favorably, because it's been a structural decline over the last few years?
So I think some parts of the problem is because of competition. So if you see, fruit juice was a key growth driver for them. And there we have seen the entire beverage companies suffer from that. So Nourishco of Tata Consumer suffered, and then they took the corrective action wherein they increased the trade spends, trade commissions, and now they are back to growth. In case of Dabur also, I think they need to do something on the trade spend. They need to do something on the 10 rupee. More aggression is required. So that part of the portfolio for Dabur is suffering. In terms of the healthcare, if you see post-COVID, the base became an issue. And my sense is contemporarization is needed. From a D2C perspective, I think there is the opportunity for Dabur, and Dabur yesterday said that they are on the lookout for that. So I would say the portfolio is quite diversified. It's a much larger company than some of the companies which you mentioned. So I would expect them to come back, and McKinsey giving consulting, I think that's a positive. In FMCG, we have always seen Bain and all these consulting companies. When they give out the blueprint, I think there's a better chance that the management will have new data points, new strategies. So I would not write off Dabur. Yeah, it has been a challenging last 1-2 years, but part of it is competition, part of it is portfolio issue also, and they need to do much more D2C M&A in my view.
Okay, all right. United Breweries also came out with its numbers, Abneesh. The premium volume growth looked very good for the company this time, in line with the expectations of 24 to 25 odd percent. Your overall reading on the numbers?
I think we are quite positive on the company. In Q1, you will see extremely strong numbers for the company. The heat wave will help. The base is quite soft because last year, if you remember, the elections had severe restrictions for United Breweries and the beer companies in general. Third, of course, is Telangana. We have got a very good price hike after 4 years. So we will see multiple levers for growth in Q1 and FY26. The new MD who has come from PNG, he is doing a lot of structural improvement. He's engaging with the government to have a win-win kind of a policy. In Rajasthan, for example, there's a 20% increase in the capacity, which will help in the peak season of summer. In Karnataka, although there is a tax hike for beer, what companies is using it as a blessing in disguise. So they're pushing more of the premium portfolio, and that's why my sense is the margins in FY26 will improve because of Telangana price hike, and even in Karnataka, the premium portfolio will now grow faster. So we are quite positive on that company.
It's very interesting that they are using the Karnataka tax hike as a blessing in disguise. Speaking about blessings in disguise, this one is not in disguise, but the UK FTA that has been signed with India, that should work as a margin positive for a lot of these liquor companies, right?
Yeah, I would expect that. So UK FTA, if you see, last 3 years it was happening, and it was a waiting game. Finally, it has happened. Now we wait for the formal notification as to from when this will be effective. Yesterday, Radhiko Khaitan in the call said that they don't expect too much of a price cut to end customer because these are the premium part of the portfolio. My sense is some price cuts will happen. It's a competitive market. Suddenly, if your raw material, the duty reduces from 150% to 75%, obviously there will be some kind of a price cut to the customer, which will lead to better affordability and more volumes, and some part of the margin expansion will happen. So yes, my sense is this is a high single-digit kind of a portfolio contribution for United Spirits. So there we will see better volumes and maybe better operating leverage also. Overall, it's quite positive for all spirits companies because most of the spirit companies do import scotch, and that will become cheaper. The risk here is some of the state government might see this as an opportunity and might increase the taxes. And second is if all companies fully pass it to end customer, then it will be more of a volume uptick rather than a margin gross margin uptick. But operating leverage will still lead to EBITDA margin uptick in that scenario.
Okay, we're going to swing back to the entire urban consumption story. And I'm going to quickly, Abneesh, ask you about your view on Godrej Consumer's numbers.
So Godrej Consumer, if you see currently from a 1-2 quarters perspective, my sense is margin pressure will continue because although palm oil has seen a good correction, PFAD, which is the raw material in soaps, that hasn't seen much of a correction. So that is one nuance we have to wait for, and that's why 1 or 2 quarters of margin pressure will sustain. Second, of course, is in Indonesia, there is a disruptive player in air freshener, and that's why Indonesia margins could be slightly challenging. Now, on the positive side, we have a buy on the company from a longer-term perspective, but from a near-term perspective, we'll prefer Marico. The key drivers will be clearly in HI. They have seen initial signs that the new formulation is working. But my sense is Q1, because of the heat wave, you may not see that improvement. But after that, the improvement in HI should happen. They have given a guidance of around 7% kind of volume growth in FY26 on that number. In terms of the Fab detergent, 250 crore kind of ARR doing extremely well. We expect that to double in FY26 and possibly next year should also further be improvement on that. In terms of the air freshener, again, they're trying a lot of innovative, a lot of disruptive pricing there. Deodorant also, which is very tough category in our view. Again, disruptive pricing and more of a pull kind of strategy is being done. So currently, 1 or 2 quarters of still, I think, challenge is there. But medium long term, I think Godrej Consumer needs an answer to HUL's disruption in the soaps formulation. Because even if palm oil corrects, PFAD corrects, I think HUL will still have that advantage that 20-25% lower palm oil is used in diaper. Yeah, so that's the
that point. Abneesh, for the first time, I think we've spoken for so long and not mentioned HUL. That's the that's the kind of conversation that's how conversations have shifted in the consumer space. Just a final question before we let you go. We've spoken about reviews so far. We've spoken about management commentaries so far. What are your expectations from Titan, Britannia, as well as you have Pidilite reporting their numbers. You like Pidilite. Asian Paints, the biggest of them all, reporting numbers. It's been a challenging 3 quarters for them as well. What are your expectations from these 4?
So out of these 4, I think Asian Paints will be weak. We have highlighted that it's a much more urban-focused company. So currently, Berger will be growing faster because Berger is more of a central India, eastern India, small town India salience. But in big towns, clearly slowdown is impacting Asian Paints. And that will lead to sales being slow, operating deleverage, EBITDA will be a miss versus expectation. That is our sense on Asian Paints, weak numbers. Of course, analyst meet is there post-market, so we'll have more clarity on the outlook. But from a raw material scenario, I think clearly paint companies are in a sweet spot from a FY26 perspective. Coming to Titan, if you see already the update is out, so we don't expect too much of a surprise there, except margins, where I think clearly we will see that there's a down trading and overall competitive intensity, which remains quite high. Britannia, my sense is margins will be a bit weak, but FY26, wheat crop is looking good. So I think Britannia, FY26 could be a good year. We are positive on the company. So these are the 3 ones. Pidilite, always a compounding story, and we continue to now see how the leadership style changes from to Sudhanshu Vats from Mr. Bharat Puri. I think that's a great company, and that remains a top buy for us.
Take that point, Abneesh. Thank you so much. Always a pleasure speaking with you. Wish to have longer conversations about deeper issues in the consumption sector beyond just individual stocks with you at some point as well. With that, we'll take a short break, come back on the other side. We'll bunch up all the stocks which are in the news today.